Hello, good afternoon, and a very, very warm welcome to the live trading hour, which is brought to you by the Live Trade Room, where we go through these markets. We have a look at the news. We have a look at as we approach the US trading session at 1 o'clock, which is the cash open. So we'll have an influx of capital into this market. So we want to do a preparation prior to that. We want to understand what's going on as far as the news is concerned. Is there any major news events that are likely to impact our decision making? And look at the technicals, of course, and just identify where the opportunities lie. And obviously, if we get those opportunities during this broadcast, then we'll be looking to trade it live with capital, with live capital, of course. So without further ado, please see our risk warning currently up on screen. And as always, we're strong advocates of being disciplined with your trading capital, but do of course take note of the risks involved. Without the assumption of risk, there is no opportunity for reward. So it is a trade-off, but should be equally as important as focusing on the reward side of trading these markets. Okay, so let's start with a quick review of market moving news, because we do have some interesting market conditions underway right now. So let's get up FOREX Factory. I suppose it's important to just literally take a little step back, because you may be familiar that inflation in the US is in real terms higher than what was expected, and that can become a bit of a problem for the Fed and monetary policy. One of the things that the Fed can do to offset an overheating economy is to increase interest rates. It takes the edge off that inflation story. However, if you increase interest rates, then people's debt, we're all living in a very debt-laden economies at the moment. Public debt is at all-time highs. Corporate debt is at all-time highs, and personal debt. It's been... people have had a great opportunity since COVID to actually pay down debt and to save more. There's no doubt about it. There is significant savings and a lot of capital sitting on the sideline. But nonetheless, broadly speaking, we are still in a debt economy, a debt-based economy, and we've got major CPI inflation increases in the US with CPI on Tuesday. PPI yesterday, considerably above expectations. Now, the move, what we've largely seen in the bond markets is bond yields actually tick lower. And this just indicates that these bond markets are not too concerned about the current situation with regards to inflation. As soon as that begins to change, you'll see that we'll probably have very, very active market conditions, and hopefully, real significant opportunities as well for us as traders. We've had better than anticipated crude oil inventories, so those stockpiles are dwindling quite significantly. There's increased demand, and yet oil is rolling over to the downside. Now, the good news is we do have actually mildly coherent market conditions now. We haven't had those conditions prior to now, so we're just getting these rollover moves, and we'll have a look at them in a second. We had Jerome Powell testimony yesterday. He's got another one today at 2:30, so that very well may impact these markets again. Overnight, we've had employment situation in Australia is improving above expectations, so they're sort of reverting back to some degree of kind of normality, or they will do in the coming months, and that's a good news story. And tomorrow we've got the BOJ and just some monthly retail sales figures. So what's quite interesting in these markets right now is the fact that we do have mildly coherent market conditions, and how we can sort of categorize those. we've got risk-off market conditions. So we're still in this trade to the downside, but as you can see, we've been trading up and down our entry over the last 2 or 3 days. So we've made very little actual progress in this trade. The dollar yen, for those of you that are monitoring this, we had a strong rollover to the downside, so we've cleared out this market. It's bounced back to the 50 period moving average, and now it's looking quite positive again. But we took a small loss. We mitigated risk. We brought a stop loss right the way up, and took more than half the risk off the trade, because it just looked like it was just going to tank straight through. So all we managed to do was to save probably half the risk on the trade, which is when you have erratic market conditions like this, 3 days up, 1 day down, and potentially more upside in the pipeline, it may be one of these trades where you might have to get into it 1 or 2 occasions before you'll probably make a return. And some of these markets are like this at the moment. Potentially positive signs for the dollar Swiss, but generally speaking, up and down in the last 5 days. Relatively similar price action in dollar CAD. Same as you can see, 6 days now of just up and down in the Aussie dollar. New Zealand dollar up and down again. So the only thing about the euro dollar is that we're actually below the monthly low. So elsewhere, the euro pound has been really quite choppy. And today we had a really strong move to the upside, so we refrained from getting into this over the last couple of days because of the nature of the price action that we've seen that's come before it, and we've got another day of that. So all we really saved is a losing trade, because we've identified the nature of this price action, and it's quite choppy, and we've just chosen to sit on the sidelines. And I suppose in hindsight is a wonderful thing, but fortunately we did do. Our bias is still ironically to the downside, but trading it is a little bit more challenging. We had a strong move to the downside for the pound yen, and has subsequently retraced. So again, it's just a lack of clarity in many of these moves. Downward pressure as far as the euro yen's concerned, and gold has had a bit of a retracement off those highs. So we were running into the 50 period moving average, just above yesterday's high, just in there, and there's more resistance just above these levels. So we don't really have a high quality trade just yet in gold. We might do. Crude oil, we had in terms of the crude oil inventory number yesterday, we're expecting about 4 million barrels, and we a negative 4% figure, and we are sorry, in terms of let me get those figures up on screen for you. So yesterday's crude oil inventories, we're expecting a negative 4.3 million barrels in the inventories in the US, and we saw negative 7.9 million. So not quite double the amount, but it's it should help support prices to the upside. And yet this is the price action we're seeing, which is a very significant rollover to the downside. OPEC have just made a statement where they see oil demand reaching pre-pandemic levels in 2022. So its oil output rose by OPEC. The output rose by 590,000 barrels per day in June to a combined 26.03 million barrels per day. So that's the amount of oil that's supplied to these markets, and we're seeing I suppose an uptick, but what this price action probably suggests is that we're seeing an uptick in output, but the demand probably is probably not quite there just yet, because if you got an uptick in supply and the demand is likely to meet supply, you're likely to see prices push higher. But at the moment we're seeing it roll over, so there is a question on this sort of supply demand dynamic in crude oil. So this was the market that we were quite interested in just a little while ago. So we've got this little handle in here. If I just get up our pen. So we've got prices trading within this range, and what we're interested in is to see if this market can actually just break below that 43.50 level. Basically, at the moment it's just pretty much up and down. That's all we're doing in a very, very tight range. This is your strong resistance to the upside, and this is your levels of support to the downside. So we're no major gain is achieved yet, but the strength we're seeing in the dollar is very much supported by the indices markets if they continue their move to the downside. So we've got really two major trades to focus on. We've got the euro dollar to the downside, and we also have the potential for a rollover trade to the downside for the S&P. Not much going on in NASDAQ. You could argue there's an opportunity as well in the Dow Jones. It'd be below the 34,656 level. We can put a bit of a blanket around this price action really over the last 2 months, pretty much. So we're not really, we're not consolidation traders, so we're not looking to buy these little mini highs and roll them over and buy the lows and sell the highs. We're looking for consolidation firstly, but then breakouts of those consolidation. Strong rollover to the downside for the DAX. Same for the Nikkei, just below yesterday's low. Kind of in line and in keeping with this little rollover trade. So that's what we can expect. What's putting a spanner in these spokes at the moment is the bond markets. They're making these markets incredibly incoherent, because they should be pushing higher, but they're kind of not, because inflation's ticking higher, and you'd expect bond yields to move to the upside, and we're not seeing that. We're actually seeing investors get involved on a negative yield basis. So that does mean to a certain degree that these conditions are quite defunct right now. Bitcoin putting on pressure to the downside. Still lots of advocates suggesting this market's going to fly. We're not so sure right now. If you wanted us to put money on direction for this market, it's probably to the downside. Clearly floors are created in this market on numerous occasions. So this is strong support, very strong support. So I can understand why some are saying, they're probably wanting it to move higher rather than, trading it with any degree of clarity. So it's got the potential, obviously, to bounce off the support and push higher. But then if it breaks through these support levels, then all traders that are in at these levels will be getting out. It'll turn to sell orders, and you'll probably see a really strong flush to the downside. Not that we're advocates of trading it. We're not. If it's a long-term sort of position trade, then absolutely, but not unless that's the case. So really, our trade plan is quite straightforward. We don't really have. We've got the dollar strength, so that's what we can, I suppose, focus on a little bit more. And in terms of sort of hierarchy of trading opportunities, perhaps we can have a look at a couple of these markets. We'll have a look at the euro dollar and see if we get further downside. Maybe the just have a quick. So weakness against the yen broadly. So so we'll have a look at the euro dollar to the downside, the dollar yen to the upside. See, we're seeing a bit of dollar strength, so actually buying gold today probably isn't the greatest idea, or trading idea, should I say. We'll definitely have a look at the S&P. So I'm just wanting to add one more, maybe for symmetry, but we'll have a look at the dollar CAD. We might see a further uptick in the dollar CAD. So we'll go ahead and just position these. So we'll have a look at the euro dollar. We shall have a look at the dollar yen. We'll have a look at the dollar CAD just up here. And last but not least, we'll have a look at the S&P 500. So this is our trade plan for the session. So what we'll do is we'll just go into each of these as the market's now open, and we'll see where the best opportunity lies. So let's go in and have a look at it on the smaller time frame. So we do a lot of our analysis on the smaller time frames. Okay, so this is quite interesting straight away. So this market had clearly made a very significant move to the downside, drifted sideways, and then we had to put up with this really strong pullback. You know, where does this market pull back to? Broadly speaking, to previous resistance. So previous support, which becomes then resistance when prices break below. So it's bounced back a little bit higher than I anticipated, but nonetheless, we've got the flush trade to the downside. So this market is so big, you know, a 10 pip move above perhaps where you'd ideally like this market to run into resistance is absolutely nothing. So it is actually performing as per expectations. We just have to put up with that kind of long term, that very significant pullback for a period of time. So 4 hours of really strong buying pressures coming in, and now we're getting that rollover trade to the downside. So if we look at it on the hourly time frame, the problem with this trade right now is the fact that it's only a pullback off the highs. So what we want to see is this market attempt to make a new high and then fail. At that point, that becomes a high probability sell trade. Will we get that opportunity? We don't know. This market could just flush straight to the downside. And I mean, we're already in the trade already. So it's only a case if we were going to add to this trade. So so it's still a momentum sell trade below that level, so we'll keep an eye on it. It is just generally a pullback though right now. Okay, so this is just a straightforward pullback. So we need a little bit more to deal with. Will this market actually start to roll around to the upside? So of the last few hours as well, unfortunately right now this is just a pullback. So the market is clearly moving to the downside. Now we're getting the pullback to these previous levels, maybe a little bit higher. So within this little zone here, we can probably expect some significant resistance, which means we'd want to see this market push higher. We'd want to see an attempt to make a new low, and we have to see this fail. So, and something like that is your kind of your potential buy trade. So that's just predicting what we want to see happen. Of course, we're going to let the market decide. So so these are just pullback opportunities for now. That's the problem with these trades, is that they're just pullback opportunities as things stand. So really we would expect actually a flush lower, and in this market we'd actually expect a little bit of a bounce back, but we do want those conditions to fail. So here we can do a bit of analysis on the dollar. We've just got some highs in here. So this really, the 25.55 level is a 1, 2, 3, 4, 5-day high. So a break above that would be a significant breakout trade to the upside just on the daily time frame. So we can go in and just assess the opportunity on a smaller time frame. So we can do a little bit more analysis then. So here is your breakout buy trade, ideally above 25.55, and this is your kind of uptrend. I mean, with a strong sort of rejection of the lows, but actually making a new low, as you can see, which is, you know, anyone looking to trade this little breakout here may very well be getting stopped out at that level, but we're seeing the prices push higher. So above that 25.55 does constitute a buy trade. So this time it's a high probability buy trade. Above 125.55. Okay, we'll just put a little note in here. So we are currently waiting a structural failure trade to the upside. Right now this is just a pullback off the lows, so we want to see an attempt to push lower, and we want to see that fail, and then we can perhaps get into the dollar yen. So obviously trading is often about timing. It's about trying to get that timing right, and sometimes you can wait all day for the timing to be right, and then all of a sudden you know, timing might not be great for you to be getting into the trade, and you might miss the opportunity, and you know, it might move over the Asian session and all these sorts of things. So you've got to deal with all of that the psychology of that situation, and again, that's pretty much what traders do. So we're waiting for structural failures also as well, waiting for a structural failure to the downside in the euro dollar. We're looking for a high probability breakout trade to the upside above the 125.55, and then the S&P 500. We would like to see this roll over to the downside. That would likely support our dollar trade. It's quite straightforward. We can do our analysis off the daily. So we'll just add a little text box in here. So so this is a high probability it's the 43.49. That's if these markets will ever get to break that. Sorry. Okay, so it's just rolling over to the downside, and we just want to see if we'll get that continuation trade through there. Let me change the size of this. So all we can really do right now is just prepare for the potential opportunity. So the dollar CAD looks like it's gonna potentially tick higher. Let's see what this low exactly is. It's the 43.50. So let's actually put 43.50 in there. So those are our 4 trades. Those are the trades and the opportunities that we're going to look for. We're going to see. I'll just do a little drawing of what we would expect really from this. So this is just a pullback to this level. So we'd want to see this market extend down to these levels. We want to see actually some euro buying coming in, and then we want to see this market rolling over, and that would be your high probability sell trade. The opposite is true from this. The market's been pushing lower. We've got a pullback. We want this market to extend further lower, and then we want to see if we can get in on a high probability buy trade around the 110.04. That would be ideal. If it just keeps moving in a linear fashion, it's just a pullback off the low. So we're always going to get another attempt to break a new low. This market, we're just looking for a coherent break above this level. And the S&P, let me zoom in a little bit more. We're just looking for a straight over rollover to the downside below the 43.50 level. So so that's what we're looking for. What I'll do is I'll just do a little graph to just pinpoint kind of what we're looking to see happen. So we'd like to see this market roll over to the downside and actually start to push higher. That's what we're looking for. We're looking to buy the dollar CAD above the 125.55, and we're looking to sell potentially the S&P below the 43.50 level. Don't think there's any major updates I need to keep you informed of. We'll just put on the squawk service to see if we get any movement on our dollar sell trade. Okay, so the market that's looking closest to a potential opportunity would be in the dollar CAD. We're still probably 20 pips away from prices actually breaking higher. We'd have a decision to make, all right, on the stop loss would have to be below the 24.25. Okay, that's quite a distance, isn't it? Okay, we could actually work with the 124.98. So we're looking at a 55, maybe a 60 pip stop loss on this trade.
Further from Bullard, seeing quite a strong US economy over the next couple of years.
Like this market can drop 100 pips in let's say an hour and a half, and it can reverse in 30 minutes. So we can have a 100 pip move to the downside followed by a 100 pip V-shaped sort of recovery, all within sort of 2.5 hours. So actually sort of a 55, 60 pip stop loss in a market like this is probably about right, bearing in mind the volatility that we're seeing, which is quite significant in this particular market. Yeah, it is reacting, and it is likely to react to oil as well, and oil is in a strange place at the moment. So these are our 4 trading opportunities. We clearly have to be a little bit. I'll tell you what I'm going to do. I'm just going to amend this in line with
That's the end of Fed's Bullard interview on Bloomberg TV.
So we are awaiting a structural failure trade to the ups, this time to the downside. So this is what we're wanting to see. We're wanting to see a little bit of a pullback followed by an extension lower. And then it becomes a high probability trade for us. Not until we're not getting that opportunity just yet in the dollar yen. So we might need to be a little bit patient. It looks like we're getting a bit of a move in the dollar CAD. And the S&P is probably 8 or 9 points away from an entry to the downside. But the dollar is continuing to strengthen. We're currently in the euro dollar trade to the downside. Our stop loss for this trade is just above. It's the 1856 if I'm not mistaken. So that's why we use sort of technical levels for our stop loss. So hopefully we will get that flush trade to the downside. And the dollar yen is just bouncing off the lows. So we really do need to be patient and just wait for the structural failure to kick in. And what we're avoiding is obviously buying this trade now because it's a buy trade and we like the opportunity. But it is a pullback off the low. So we will at some point get another test to the downside.
10 minutes now to the bottom of the hour. We do have a slew of US economic reports set for release, starting with the weekly US initial jobless claims. A reading of 360,000 expected versus the prior of 373,000. A range seen of 325,000 to 375,000. For the continued jobless claims, 3.313 million expected versus prior last week of 3.339 million, as a range of 3.1 million to 3.412 million seen. Next up, we do have the US Philadelphia Fed Business Index for July, 28.0 expected versus prior of 30.7, a range of 20.0 to 34.0. On the breakdown, the prices paid index 80.7 previously, while new orders 22.2, the 6 months index 69.2, capex index 40.4, unemployment index 30.7 previously. Next up, the US New York Fed manufacturing reading for July, reading of 18.0 expected versus prior of 17.4, with a range of 12.0 to 21.0. And finally, the June reading for US import prices, month-to-month 1.2% expected versus prior of 1.1, a range of 0.5 to 1.5, with the export prices month-to-month 1.2% expected versus prior of 2.2, and import prices prior of 11.3. So looking at a note here from TDS before the US reports release, they note that claims can be more volatile than usual around this time of year because of season adjusted challenges associated with annual auto plant shutdowns, but they expect the trend to remain down, looking for a decline to 350,000 this week, noting that the downtrend has been more consistent with the strength in the labour market. Much of it can probably be explained by normalisation in the relationship between the data and the other labour market data. While the Empire State and Philadelphia Fed surveys likely continue to signal strength, helped by fiscal stimulus and post-COVID opening, as well as suspecting that the boost to the goods sector, in particular from stimulus and reopening, are past their peaks. Looking for below consensus declines in July to 16.0 for Empire and to 26.0 for Philly Fed.
Okay, we'll get a further update from our Squawk service now in just a second. F. Joe, good afternoon. What do you expect for the US 100 and the US 30 to react to the market opening? We were kind of discussing it a little bit just a short while ago. So we're seeing the S&P roll over to the downside. So if I just take this off the screen just for a moment, and we'll have a look at the Nasdaq and the Dow Jones just to compare and contrast. So just be mindful of what's going on in this trade. So we've got a lot of let's say up and down type price action, but now we're just taking this little rollover trade to the downside. So we're in, I suppose, technically what's regarded as a kind of risk-off market condition. So what would be our expectation is to see a bit of a rollover to the downside. Now, it might be a very short-lived. When we get these little flushes lower, we often get a lot of buying kicking in. These are the markets that just keep on making new all-time highs at a scarily frequent rate. And this is in spite of yesterday's PPI inflation data and also on Tuesday's CPI, very significant above expectation with regards to those figures. So really, what would we expect? We'd expect the stock markets, the US stock markets, to soften, and they just haven't. They're just maintaining this level of resilience. So when these do take a little rollover, we are very interested to see if we can get into them. Now, our trade of choice would be like the S&P 500. Your Nasdaq market, which is comprised of a relatively small number of really high-performing tech stocks, just keeps continuing to drive these prices higher. So you're going to run into a lot of resistance a lot quicker if you look to sell this particular market for that reason. Dow Jones, Dow Jones and the S&P would be markets that we would prioritize, FJO, to the downside. But I suppose our focus is really going to be on the S&P, see if we get that little run lower. So our expectation would be to see these markets push lower. That's what we'll be looking for. And if we're looking to buy them, we can only really get in to, buying all-time highs, and that's something we just do not like doing. Although, in hindsight, that would have been a very, very good trading idea or strategy, but very difficult to do. Yeah, so you like the Nasdaq below there, the 14,700. Yeah. So it's probably just underneath this 3 and 4 day low. You could possibly actually look to sell it a little bit higher. The 17,999. Sorry, the 14,795 dollar level would be probably slightly better. Waiting to get in at the 14,700, you're probably, oh, I see, so you actually put the wrong level in. No, that's fine. The 14,870, yeah, that sounds much better. 14, yeah, so it's below today's daily low. Now, it's not exactly a high probability sell trade. Mind you, it does look good on this, doesn't it? You see there's these little levels below which could provide support. The last level is this level here. I see what you mean. There's a absolute argument to get in below the 870 level. 14,870, absolute. It'll be a structural failure to the downside. Look at it on the hourly time frame. So and what you have as well with a trade like this is you have a relatively neat and concise stop loss, i.e. an all-time high at just over 15,000. So you would like to think you'd get a good 2 or 3 to 1 in terms of a profitable risk reward on a trade like this to the downside. So I absolutely see your trade, and that's definitely a market that would be worth keeping an eye out for to the downside for sure. You're gonna come into a lot more support if you're trading Nasdaq, but then the fall could be greater. So you've got to try and weigh that up yourself. I suppose just from a slightly safer perspective, and the cost of trading, the S&P is a little bit cheaper. Just we're looking to see if we can get a little rollover trade to the downside. But you see, these trades might prove to be quite stubborn, because as soon as the wheel starts to come off to the downside, they'd be very concerned that there'd be a very, very quick, short-lived correction. And I'm sure, anyone that's buying these markets would be very fearful of something like that happening, and it can happen sort of pretty quickly. It just needs a catalyst, doesn't it? It just needs something to be able to drive these markets to the downside with conviction, because we're just not really seeing it. Any type of selling, what we see next is buying coming in straight away. They're not even buy the dip trades, they're just out and out buyers at any price, and they're getting a small little pullback, and they're looking to go again to the upside. So very frustrating markets these to look to buy them. But the S&P, we'd probably marginally prefer the S&P over the Nasdaq. I suppose the nature of the volatility, but the trade absolutely stacks up, FJO. So good luck to you if that's your weapon of choice. The Dow Jones, again, will we get that resilience? We very well may do, and that's what our major problem is with these equity markets at the moment. So what we can do is we can revert back to our platform, and just the S&P we're missing. Yeah, listen, my pleasure. And if you're in anything else or you want us to have a look at anything else, unfortunately we do need to move across to another trading session now. So we're going to end this little broadcast, if that's okay. We're getting close to the dollar CAD to the upside above the 125.55. We're getting quite close as well to the S&P to the downside. We're probably 10 points away from that, and we need the euro dollar to just push higher for a period and then roll, and then there's your high probability sell trade. And it's the opposite for the dollar yen. We need for this market to squeeze lower and then to reverse to the upside. So we might need to give these markets a little bit of time. On other notes, we've got some exciting developments going on. We'll be day trading markets for sort of 4 or 5 hours every day, starting in September, having come out of the whole COVID situation and things like that. So we're taking some time off in August, just to, the vast majority of the trading investing community do take some time off in August. So we're going to do the same. We're going to have a nice little break and then come back all guns blazing in September. So if you want to subscribe to our channel, give us thumbs up, that would be great. We'll notify you when we'll be doing a live broadcast every day in September as well. So if you want to join us live for free through YouTube, you can join us. If you want to trade with us more often, you can just go to our website, thelivetraderoom.com, for more information there. We don't charge huge fees, just so that you're familiar. We do well enough out of trading markets with our own capital, so we do extend our knowledge and experience to you guys in a kind of a genuine, open trading environment. And you can find all that through the live trade room. So yeah, just wanted to update you on that. And we'll be back again tomorrow at 12:30. So if you want to join us for that, please do subscribe to the channel. Click the bell function so when we go live, you'll be notified automatically, and we'll see what opportunities we have tomorrow. But do take note of these opportunities, and hopefully we'll get some moves in the not too distant future. But we need to be patient right now to just wait for that better quality move to come our way. Okay then, so on that note, guys, thank you very much for joining us as always. Do take care, and we'll see you again tomorrow at 12:30. For everyone here at the Live Trade Room, bye for now.